Is Peter Hartman here, your friendly neighborhood motivational speaker and comedian, here with my brother Tom Hartman, web programmer and marketer extraordinaire. We're here on Jumpstart Live, your place to learn how to build, create, earn, and just be an all-around better human being. You got to get your butt off that couch. You got to start doing stuff. All right, and you're going to hear things on Jumpstart Live that might motivate you in order to be inspired to check something out, go somewhere. The thing we're really excited about right now, of course, is cryptocurrencies, Bitcoin in particular, Cardano in particular, Ethereum as well. And if you're looking for something to get excited about, you're looking for something to dive into, you're looking for something to learn about, we certainly suggest you check out there. But if you're interested in anything else, please let us know. You can write a comment down below. We'll do videos and on topics that you find interesting as well. Tom, I wake up this morning and I see this video. It's talking about a black swan event that's coming. Palantir buys 50 million in gold. I'm thinking, isn't Palantir buying crypto, buying 50 million in gold? People are going, hey, I think they're thinking there's a black swan event. This is what I told you. There's a black
I
swan
mean,
event
they
coming.
were even paying down their debt. They paid down all their debt.
You spit out the words that I have no idea what it means. I mean, you're like, I had no crack up boom. Crack up boom. So that's where we are. I said, save it for Jumpstart. Please explain it to me on air. What the hell are you talking about? Is the stock market not going to crash? Black swan event. What's a black swan event? Take it away, Tom.
Yeah, so I mean, I've been waiting for a stock market crash for a while now. Me and Peter Schiff, we've been waiting for the stock market just to hit zero and for the dollar to crash down to zero. And it turns out that's not what's happening. Like you would have thought that global shutdown and an epic pandemic that's now run on for 2 years, that the stock market would, if not crash, at least stay even. But it has exploded up. What is it, like 100% higher than it was even before the COVID crisis? Just unbelievable. Now it did crash at one point. Like the stock market did drop like 30-35%. But it only did that for like 5 months. Like 5 months after the worst epidemic, or the first black swan event that we've ever seen, the stock market was cruising at all-time highs again. I was just blown away and lost a chunk of change on that one. I'll tell you that. I was not expecting that. I would have bet. Look, after the housing crisis of 2008, stock market, it took it, what was it, 6 years before the stock market came back to the highs that it was before that. The dot-com crisis, I think it was like 7 years before the stock market came back. So I figured I got some time. I got a few years as the stock market's going down in order to make money as it falls. Not at all. I mean, Peter, put that chart up there for the S&P. This is not just a healthy recovery. So that first bump you see there at the bottom over here, right? This guy over here. This is your average stock market crash. This is the dot-com crisis over here. The next one over here.
You're not talking about a bump. You're talking about a dip, right?
Well, this is not just a dip. This is like literally a trend change. This is stock market crash. This, if you had money in the stock market over here near the top where a lot of people were in, it was 2000 to 2007 before you even got back up to even. Right? So if you bought Microsoft stock over here near the top or anywhere near around here, late 90s, early 2000s, it was right at the housing global financial crisis, housing collapse, that you were like, oh, okay, my pension, my retirement fund, whatever, is back up to even, and then boom, it fell down again, and it was another 7 years, 2013, before the stock market came back up to even. So stressful time. Stock market crashes are things you sort of want to get out of the way of, and so as you can see, every time it got back to the level it was before, people were like, okay, this could be a dangerous period. But then you see from 2013, it's just up and to the right. That's exactly what this chart is. I mean, as crazy it is here, as the stock market, it went up in 2015, there was like a crisis in China and Brexit and all that. In 2000, it went up still after that. In 2019, there was a short period of time, a couple of months, whereas what we call Volmageddon, there was just this weird a technicality in the stock market that caused it to crash for a couple of months. and then we get to COVID, and we had this nice deep crash, and then I mean, like a bat out of hell, it crashed and bounced straight up. So basically, from the highs of the .com and the housing crisis, the stock market is up uh, nearly 200%, which is just an insane amount. So people are like, and including Peter Schiff, they're like, the stock market should crash, right?
Mhm.
Right? You can back over here, Peter. The stock market is going to crash. That's what you would expect. Where it's just overpriced. How can Amazon stock be worth $3,000? You know, something has to happen, and we're expecting a fall. And people like me who bet on the stock market crashing or at least falling, seeing this has been very demoralizing. Um, but what you're seeing here is the stock market is crashing, but it's crashing up. It's crashing up. Now, so if you have any of these stocks, right? If you're sitting on stocks that you bought in 2011 and you haven't sold and you weren't shaken out by any of the dips, you're happy. Your portfolio is flying right now. You think the stock market could do no wrong. Um, but if you don't have any stocks, if you're 18 years old, you're coming into the labor force, you want to buy some stocks in order to participate and get in dividends, generating cash flow, participate in some of these assets. Well, you can't, right? When a share of Amazon was $100, you can expect to be able to get accumulate maybe $5,000 worth of shares and start building a healthy nest egg. Well, that $5,000 won't get you 2 shares of Amazon today, right? So it's like this is not a good thing. And if you're being paid dividends for your stock, right? Let's say you get a 40 cents dividend on the shares. Well, you want as many shares as you can, right? If you're able to accumulate 1,000 shares in a stock that gives you a dividend, you're going to start generating some cash flow, and that cash flow you reinvest back into your account in order to buy more shares. Or if you're like a pensioner, if you're a retiree, well, the dividends are paying for your travel, for your rent, and stuff like that, right? People are used to getting at least 4% uh, in cash flow from their stocks, and then you can leave your stocks to your kids when you die. You can't do that. Now there's this massive crisis where the dividends are not enough, right? You have to actually sell the stock that you have in order to get the money you need to live or to realize any of those gains. And uh, Peter's gone. Peter's gone here. Let's see if he'll come back. Actually,
No, Peter's not gone. Peter's
Peter's
not
not gone.
right here. I'm
I
right
see. I see.
here. It's just that if you're
Sorry
doing the
about
majority
that.
of the talking, then
Right. Well, so then what you have here is the uh, people. You have these stocks. Let's say you have 10 Amazon stock, right? It's worth $30,000. You have to sell some of that in order to pay the things you need to pay for, and that sucks. You're selling your asset. It's sort of like if you have 2 homes, you're selling one of the homes in order to pay for what you need. This is not a good thing, and so people are nervous. It's can you imagine you're sitting on a stock that's gone up this much in this type of crisis, and you're thinking to yourself, well, at any moment this thing could just tank. And so the central banks around the world, the
Peter
governments
Schiff,
around the world,
just like Peter Schiff.
well, the governments around the world, they because of all the practice they had in the 80s and the 90s and the aughts to get out of a crash, get out of a recession,
Mhm.
they've ratcheted up their skills, and they're like, let's. It's almost like they found a formula to never have it go down, but the formula to never have it go down has made it go up too fast, right? So people are not complaining right now where Amazon stock's at 3,000. I'm using Amazon as a classic example of a high growth stock that's worth a lot. It's a tech stock. It's a growth stock. It's not something that we all know. Use as a proxy. So imagine now Amazon stock. This keeps going up. Right, it's been 7 months now. The stock market has been going up basically in a straight line, and the rate of change of it going up is increasing. So you can imagine at some point where the amount of time it takes the stock market to double from here might be even less time, and then double from there, even less time. So what happens if a share of Amazon is $30,000? Like we think that now that's insane, but it seemed the $3,000 price tag for an Amazon stock seemed insane 10 years ago. I mean, Amazon only started making money 5 years ago. So Amazon stock you should trade at like $3. So if it gets up to some insane number, which it can, the rich get richer and the poor have no chance, none whatsoever. So this is a crash, but the other way, a crash up, which is
The crack up,
terrifying.
boom.
Crack up, boom, exactly.
No,
So what I'm looking forward to is that I'm expecting a lot of volatility. So I'm expecting it to so it's climbing massively, and then I expect to get massive drops, just sharp drops in the stock market, and then immediately sharp rises to even higher, and then more sharp drops and even sharper. I'm expecting the seesaw and this whipsawing of the stock market that'll be dizzying, and that is a nightmare for people who have to manage money. I mean, if you're managing, half $1 trillion, you can't have it that your portfolio is worth 30% less, and then 50% more, and then 40% less, and then 10% more, and like that's just it's unmanageable. How do you plan for your life? How do you plan for your retirement? So this is more of a problem than if the stock market crashed like it did in 2008.
well, way to end on that point.
Well, here's
Worse
what I find
than
beneficial.
2008.
This is what I find beneficial. So, uh, Bitcoin and cryptocurrencies came out of the financial crisis because programmers, the heroes of the world, decided this is not going well. Like we can't just be going through crisis because the central banks and governments decide they're going to print money or manipulate the economy. We need something. We need sound money. We need money that's actually representative of people's labor, that allows them to store value properly, that allows them to trade in the way that they want to trade, and to circumvent the system. Well, there's a reason why the cryptocurrency space is exploding right now. It's not just that the technology is so innovative and allows us to do all kinds of different things, which we might get in a little bit with Cardano. It's
Mhm.
that who wants to chase stocks that are going up 100% in a year? Who wants to chase that? Who wants to chase a $3,000 stock of Amazon because you worry that next year it'll be worth $5,000? Who wants to accumulate that? And then you never know if it's going to crash afterwards. Like people complain, people in the regular financial markets or who are not in the crypto markets, let's say, will say, well, Bitcoin is a bad investment, or is a dangerous investment because it could fall to zero at any point. Well, you look at that S&P chart and tell me that doesn't look like it could crash at any given point. I don't know what you're talking about. People have a house that you would have purchased for $50,000 in 1920 in 2000s could be worth $500,000, and today it could be worth $2.5 million. So the idea of using your money in order to buy a house and have that be a store of value over time to maintain your wealth, or to increase your wealth, that's also dubious, right? Who's going to buy? Some people are buying god awful rundown houses today for $1 million, and they don't know for sure that in 10 years they're going to be able to sell it for the same price. Like you don't know. And so the cryptocurrency space has become this boon, this sort of like Raoul Pal describes it as this life raft, this way of you can get out of the regular system to a certain degree and participate in this other way.
Michael
That's more
Saylor.
than just
Oh,
collecting bitcoins. It's a whole ecosystem that's developing there, and it's because of what's going now with the asset markets that looks attractive to people of our generation and younger.
because it's an asset that can afford, right? You can't buy a fractional share of Amazon. You can't buy a fractional house. Uh, well, maybe not easily, but you can buy a fractional Bitcoin.
That's right. So like they'll say, "Oh, Bitcoin's at $50,000 per Bitcoin," but you don't have to buy a whole Bitcoin. You can buy $1 of Bitcoin if you want to, and so you can still participate in that economy. But to me, it's not even about the price appreciation. The idea is sort of like, um, it used to be that you can imagine that you work at your job, and you do something on the side, or use some of the money from your job in order to get additional income. You're going to start a side business. You're going to use your money to invest in your friends and your family, participate in something locally. It made sense to do that, right? Well, who now thinks it's a great idea to take $10,000 that they gathered over the last 5 years and invest it in some local restaurant and some local business? You go, no. If I'm going to compare that to at least the stock market, you go, well, I'm going to buy the stock market. It always goes up and to the right. So money comes out of those endeavors that you know that the economy was usually relying on, the private economy is usually relying on. But now that the stock market's not even there, or the real estate market even's not even there, or all these assets, the crypto allows you see what's going on in the crypto space is that these tokens are people not just buying Bitcoin and buying Ethereum and participating over here just because they're just trying to park their money on the side. You actually get to do things and invest in different ideas and participate in different ecosystems that are different than what you are normally used to.
Yeah.
So it's not just borrowing and lending. You can actually, there are businesses that are built on the backs of these cryptocurrencies that are amazing. Cardano to me is one of these things. Cardano is, this is a cryptocurrency. Like we understand that cryptocurrency is this idea that it's uh they call it crypto because it's cryptographic. It's for sure you own this piece of thing. For sure you own this Bitcoin. It's provable, and currency because it flows as a currency does for exchange of service and goods. Well, the mechanism, the blockchain, that the technology that underlies cryptocurrencies can be used for more than just currencies, and more than or rather, these protocols, you can build all kinds of things on top of it. You could build better voting systems, better governance systems inside of clubs and businesses. So imagine you're in a business, and the business needs to be able to make decisions as to what type of product changes they want to make, or how they want to change the development of the company, and they want to take their employees' opinions into consideration. Well, instead of having to interview every employee individually and have one or a few people in the committee decide on what on aggregate is the on balance what the choices for the people are, and not be able to have this two-way communication throughout your entire staff. Imagine you had this voting platform that allows every employee in the company to proportional to the amount of cryptocurrency of that company that they own, that they've gathered, are able to vote on propositions. They could submit proposals for things that could be changed from the company, from lunch hours to what kind of products they should innovate, and then they're able to vote using the cryptocurrency, and they're able to take a share of the profits because the cryptocurrency of that company increases in value as the company increases in value. And so your participation in it, your voting, your participation in it, actually is beneficial for what you're participating in, and benefits you financially. This is the type of thing we never had before,
You
right?
sound like Richard Wolff, Tom. You a socialist? You want the employees to control the means of production? They're the ones that are producing all the capital and all the wealth. So they should be the decision makers. They should get their vote. What are you talking about here? It's not that they're employees of the company that give them the right to vote on it. Is that they're investors in the company that gives them a right to vote on it, right?
Well,
By
they're
purchasing
stakeholders.
token, by investing their capital, they become shareholders in a sense in this new economy for this company. Am I getting this right?
Yeah, but it doesn't have to be investors. It could be stakeholders. It could be that some people are accumulating the let's call it a token, not just a cryptocurrency, but the token of that company. Some of them are getting it because they're buying some from the internal market. Some of them are they get it as a byproduct of the number of time. If you work overtime, if you've been there a certain number of years, if you've completed a certain auxiliary task, you get this currency. Some of them are gifted as bonuses from managers. Other people trade their credits. So you pick up someone else's shift, so you get their hours. Plus, they give you some credits to some tokens in order to sweeten the deal. There's all kinds of the currency aspect of it allows you to have this new type of information flowing within any given system. You can even have it like within a family. You could have a token for your family, and the chores that your kids are doing, they're getting remunerated in this token that represents a certain value within the household, right? More than just gold stars on a chart, they're actually seeing that their efforts, that when they save their parents time and effort by doing a certain chore, it turns out that the parents are able to bring in a little bit more money, adds to the treasury, and then the value of the token in the family goes up. Like, I'm just giving you an idea here, but there's all kinds of different ways that this can occur, and not just for currencies. Like this, there's you can, because the blockchain technology is basically permanent. You can, let's say, post messages on, if you want to post a message. Let's say you're a notary, right? Or you need a notary. And not, the reason you need a notary is that you need a third party to mediate between party A and party B to say, yes, I stamped this, to say, yes, for sure, this is true, this is factual, this person owns this thing, or this person completed this task. Well, imagine that instead of that, party A and party B doesn't need the third party because they could post the confirmation of this on blockchain, and anybody can go to the reference, to whatever link that they reference in this location on the blockchain, and prove that this person had this at a certain time. Or oh my god, there's just so many different things you can store in a blockchain, all the files on your computer. So instead of having, like, let's say Dropbox or some sort of Google Drive, you can have a blockchain that's everyone's files on there, and anybody from anywhere who has the right code can go access that files in perpetuity. That information is always there, it's never lost. Like, it's unbelievable the types of things
You think
happen
that
in this space.
Do you think that families will have tokens for their family, and instead of giving an allowance to your kids, they get credits in your currency, and it promotes generational and family communion because uh, any productivity that any family member does can add to the whole. So now you're really proud to be a part of the Hartman clan or something like that.
Yeah, I mean, these are all ideas, these are all possibilities that exist because of the cryptocurrency space. But you can even imagine that, let's say, families were starting to do that, that all of a sudden now there's an exchange rate between families in an area, or families of a certain interest. So now you can have, either shared tokens, or an exchange rate between, Hartman tokens and Barley tokens, right? And that way the productivity of the family is competing in a healthy way with the family somewhere else, or in a school or in a church or whatever it is. Like, there's all kinds of things you can do when you have this unit of information that could travel in the way that currency does. I mean, the pricing
I'm gonna have
information,
to stop you soon. Okay,
of course,
pricing. Go
uh,
ahead.
pricing information is one of the most important features that we have in our economy. When prices are high for a given product, that tells the people inside of the community, that maybe you want to go make more of that thing, or produce more of that thing, and because there's money to be made there. And if the price is too low, it tells some people, well, maybe I shouldn't be in there because there's not enough profit. Let me go do something else. It helps to reallocate productivity and skill. So to have that mechanism in a more granular way is unbelievable. And Cardano is doing exactly this.
My hope with a stock market crash or crack up boom is that it more and more people are realizing how flawed the current system is, and it might make them a flight to safety here, right? A flight to, normally they go to gold, but since now there's crypto, Bitcoin, for example, they can go into Bitcoin. Young people can get assets. The blockchain provides all these features. A crack a boom or a crash, what does that mean for Bitcoin? Because right now I expect you explained to me that the stock market forecasts in the future. So the price that's there now is representative of what people think the value is in the future. Uh, so the stock market is kind of ahead.
Yeah, it's
Why
discounted
don't
in the
we
future.
see this huge boom in Bitcoin, for example?
So we're gonna be careful. The short answer to this is that, yeah, there could be a bunch of money that goes into the cryptocurrency space, because, I mean, as it is right now, because it's not just a flight to safety, but they're seeing opportunities there.
Mhm.
But the thing I would want people to remember is that when a crash does occur, and a crash will always occur, which all that means is that there's fear and uncertainty to the point where that market can't discount the future. It doesn't have an accurate idea of what the future is, and so it's got to sell assets now in order to protect themselves. Right? They go, well, I'm holding on to a bunch of shares of Amazon that have gone on in price, but that money is not spendable until I sell it. And so, if all of a sudden the Amazon price drops by 20%, it might make me go, hey, no, you know what? Let me sell my Amazon stock now, because I'm not interested in staying
But is
in
that
this
the
thing.
same as
Or,
the crack of boom? Because if it
well,
goes up, then you don't want to sell your thing, or if you do sell it, if you can, then you have more money.
the crack of boom for your average person, especially a person that might be listening to this, it's hard to get into. It's hard to get into, to say, I'm going to take $5,000 of my money and put it in something that's just been going up in a straight line at dizzying heights. So it's just like someone in a crash, people go, well, I don't want to put my money in here because the stock is going down so fast. People also think, well, I don't want to put my money in the stock because it's going up too fast. And so the effects, you have the same sort of effects. People who have money to spend, they might say, okay, well, I'm going to go into Bitcoin because that to me seems more stable than a stock market that only goes up and at some point has to crash at some point. So all I'm trying to say is that money will flow into the cryptocurrency space, into the Bitcoin space, for a number of different reasons. But what matters to what I would want to matter to our audience isn't that you're in the cryptocurrencies because you're fearing a crash, or you think that you'll make tons of money. It's just that you want to participate in a growing ecosystem, and it might turn out that the money, it just stays stable, and that's useful. It might turn out you bet on something that goes up really well. But what I would want people to watch out for is that when there's a crash in the broader financial market, let's say the stock market crashes 50%. Well, in a crash, people sell first what's working, what what they're up on, and then when if it keeps on crashing, what they have to. And so do not be surprised that if the stock market drops 50%, Bitcoin drops 80%. Don't be surprised of that, because people will sell the things that they need in order. I mean, if you need this money to live, right? If you're a pensioner, you need this money to live. You don't have the luxury of saying, well, I'm just going to hold on to my Bitcoin as it drops 50%. Like, you can't do that. And so
Hey,
what you don't want to do though is panic in the drop. If you buy a thing because you're buying it because number goes up, well, then if number goes down, you're going to panic. What I would want people is not to panic. Know what you're buying, put money that you can lose, and step away, and accept the fact that even if it goes to zero, that you're fine with that, because then you'll be able to participate, and if it doesn't go to zero, it can continue going up later on. But there's going to be a drop, there's going to be a crash at some point, and it's going to be violent. As incredible as it went up, the crashes that you get are commensurate with how fast the rate of changes for the stock going up. And so once that S&P that we saw, I mean, when there's going to be a point, it could be when this S&P is 10 times higher than this, there's going to be a crash that's going to be unbelievable, just incredible. And it'd be naive not to think that that's gonna affect the cryptocurrency space. And so what I would want is, don't panic sell there. I mean, sell if you want to sell, but don't panic sell, because it will happen.
all right. I want to get to Cardano before we wrap this up. We can't
Well,
stay
there's
here.
not much more to say about Cardano, so I just want to point out that
Well,
Cardano was like the Apple
we'll,
of.
we'll, we'll end on we'll end on Cardano in just one second, but even if it's just a quick update. But this is the way that I'm understanding it. If there's a crash or crack a boom or whatever, everything I can expect everything to go down. People take their money out of the market. They're not about Bitcoin or stocks, whatever, to take it out. But if all this money comes out of the market, I believe that companies can fail and disappear, and then when the economy comes back, they're not there to participate in the coming back, but Bitcoin will. So my expectation is that if it does go south, and if crypto or Bitcoin does go south with it, that it doesn't matter how low it gets, Bitcoin will inevitably go back up. Whereas when it comes to a stock, I don't know. Tesla might disappear. Like, I mean, maybe not Amazon, maybe not Google, but I can expect. Like, I believe I live in a world where Apple could disappear. You know, not only their stock price goes down, but the supply chain goes away. There's geopolitical stress because they can't get deals with China. India is dealing with COVID, and suddenly, just Apple can't sell products, but Bitcoin will return. Is that a good way of thinking about it?
So that's exactly what I don't want people to feel, because if they go, it will return. Someone might say, I need this money in this Bitcoin, but I'm not going to sell because I know it's going to come back. You don't know it's going to come back. So
Well,
don't buy it.
I'm not talking for the people who need money.
No,
We
but
all
that's the important point. If Bitcoin goes to zero, like, it's possible it doesn't come back.
Will you
It's
sell your Bitcoin if it goes down?
no,
That's what I'm talking
but
about.
I will keep a minimum amount of it. But as Bitcoin goes up in price, I sell some, and as it goes down in price, I buy more. So that's just my style for it. But for a regular person, I would say, if they're in the cryptocurrency because they like that price appreciation, then you better be selling on the way up. And if it crashes to zero, well, it crashes to zero. But don't think to yourself, I know this will come back. because you don't know that. But that's not why you're
Me,
buying it.
me and Max Kaiser, we know that. All right. So
Max
don't
Kaiser.
tell me what I can't do. All right. Um, Tom, before I let you go, could Cardano be bigger than Ethereum and Bitcoin?
Absolutely. Well, the short answer here is that Ethereum,
I think you
people
gave
like
the short answer. You said absolutely. Not,
absolutely.
yes, I think so. Absolutely, it could be bigger. I want to hear this, all right? Because I'm all about Bitcoin, and I think what you're saying is incorrect. I think where you're going is wrong. That's exactly what I don't want people to be thinking about Bitcoin. But go ahead, tell me about Cardano. Tell me.
So if Bitcoin is like an engine of a car, Ethereum is like the car itself. So the engine is powerful. It's doing something. It's emitting energy that's useful in its own right. But you want to get some places, you use a cryptocurrency like Ethereum that has the ability to program stuff around it. The problem with it is that Ethereum needs gas. You need gas inside of the tank. And this gas, man, oh man, just to do things can be really expensive. So like if I want to send you $100 in Ethereum, oh sorry, if I want to send you $100, I'm using the Ethereum network, it might cost me $100 to send you $100. That's hell. It could cost me more than that, depending on the time of day. It's very variable. It costs a lot of money, and so this is a problem that people have been trying to fix by creating different cryptocurrencies with different purposes. Uh, Cardano, from the ground up, Ethereum came out and didn't know how big it would be. It got bigger faster than anyone knew. So it's I forget who describes it this way. It's like a 737 flying through the air, and they realize, oh shit, we need to change the engine, and so they have to change the engine mid-flight. Cardano is sort of like they saw all this, they saw Bitcoin, they saw Ethereum, they saw a bunch of stuff, and they're like, let's build it from the ground up, sort of like Tesla. Let's build it. Let's rethink the way that these cars are designed. Let's think of AI for the driving. Let's think of batteries for the energy. Let's think of different comfort levels. Let's really rethink the driving experience, and that's what Cardano has done. And so I'm very excited. In the next month or so, they're going to be releasing their own smart contracts, which basically allows them to compete with Ethereum on the same sort of things that Ethereum is doing. And I think it's very possible, with my experience within the ecosystem so far, that the quality of the applications built on Cardano will be like the difference between apps on the App Store and apps on the Google Play Store. There's way more apps on the Google Play Store, but the quality stuff are on the App Store. And to get in at such a low price. I mean, this might be your last chance to get in our Cardano below $3. I mean, I remember when I was talking about it when it was $1, right? And now it's a 250, right? Headed up to three. So this is the sort of thing you get the benefit of an ecosystem that you want to participate in. You get shares that matter, right? You have price appreciation. You have granular control over your holdings, so you can sell stuff when you need to make some money. You can earn interest on your Cardano. Literally, you can just make 4% interest just holding the Cardano, not even doing anything with it. There's like so many things that are possible on the system, and now's the time to do it. This is me telling you to buy Amazon at $3, Peter. That's what this is. Don't wait till Amazon at $3,000, bro.
All right. Well, I don't know how Peter Schiff is feeling these days. I don't know what's going to happen
He
with
doesn't
gold.
have enough Cardano, I'll tell you that.
He doesn't have enough Cardano.
He doesn't.
How much gold do you own? Don't answer that. All right. This has been Jumpstart. My name is Peter Hartman,
I'm Tom Hartman.
and you're watching
I'm watching
Jumpstart Live.
Jumpstart Live.
Continue the conversation over on Telegram. Check us out, patreon.com/happy for a change. Become a patron for $5 a month, USD, or Cardano, I don't know. And you can participate
Soon.
in these conversations.
Soon.
You can ask any question. You can have us in your back pocket. Jumpstart Live.
Oh, on the Jumpstart Live on the Telegram, we want to talk. We got to talk about Rally. Remember the Rally tokens, the community tokens? Oh, Peter, the things I have to tell you are gonna blow your mind. I'm just so
All right, let's do
impressed
it.
by it. Yeah.
So you're not available tomorrow, maybe Friday?
Yeah, we could do it Friday.
Or I'm available tomorrow during the day, but there's a podcast or something you got. So
Yeah, we could do it during the day.
we'll see. All right,
Yeah.
that's great. Tantalizing. Cardano and Bitcoin. Take care, everybody. Crack up. Boom.